All right, welcome everyone. Welcome to the last Hurley Investments Market View commentary for the month of June 2025. Pleasure having you here. I was really struggling. I've been gone for a couple weeks here. Took some vacation, been working, been busy. With that said, you'll notice that maybe only one of Keeve's commentaries was up. We had an issue with the website and we ran out of storage. So everything should be up and cohesive the way it's supposed to tomorrow. As I was thinking about what to talk about today, my first thought that came to me was, I love it when a plan comes together. And this most likely comes from a really funny show that I grew up with, the A-Team. And Hannibal Smith used to say, I love it when a plan comes together. The process was coming together very nicely for us this year. Very nicely that we had a 20% drop. Very nicely that we added some protection on. Very nicely that we added shares from the profits of that protection. I'm not saying everyone, but a lot of people should and could have seen a 10% gain in their accounts last month alone. And a 10% gain is just taking last month's, obviously, last month's number, whatever you ended May in, multiplying it by 0.1, and that's your growth for this month. We had a really, really good month last month. It's an opportunity where no one that I know of, and I'll go ahead and I'll write that. No one that I know of has an opportunity ever to see a 1 month 10% plus return. And that is the opportunity that we have at some earnings and when a bunch of things come together. We have a lot of stocks that have opportunity. I'm going to go over with those with you today, but I just thought today I'd talk more about, in our education portion of this, more about how to make some decisions to help you in today's market. And I'm going to start off with the right and left. We're going to go through Trump, right? We know Trump's going to get executive order signed. He's going to push things through Congress. In fact, our next big push will most likely be the great big bill, right? The great big bill, where we're going to keep taxes at a lower rate for individual and corporate taxes, since they've been the same taxes we've had for the last 8 years, I guess the last 7 years, right? That's what we're trying to fight for in the great big bill. Is there other pork going into it? If you talk to Elon Musk, of course there is. But that's going to give you certainty for businesses to know for at least the next 4 years, we're going to have the same tax rates as we've had for the previous 7 or 8. That's the certainty that markets are looking for. Deregulation. Oh my gosh, the banks last week, they only have to save 1.4% instead of 2.4%. Cash on hand. Well, yeah. Kevin, we're in a recession, or we're most likely going to be in a recession. Most likely, yes. We'll find out those numbers relatively soon to see if technically we're in a recession or not. But that we haven't seen the defaults like before. We're not in a situation like before where the banks have to have, 2.4, at one point it was 3.6% cash reserves for run on banks. That's why we've been in Bank of America. Bank in America over the last month from 36 up to 47. We've had a run on Bank of America of like 30% plus. Kevin, do you really think Bank of America can be at $55? Well, that's what we went at the beginning of the year. It's not a matter of who you like, Republican, Democrat, Tea Party, Independent, whoever is in there, you have to trade to those strengths. And the strengths are going to be deregulation. Well, Kevin, we're deregulating and we're pumping more oil than ever before. Why aren't you into oil stocks? Well, because last time when we were pumping, oil companies couldn't make enough money to generate a profit. I'm looking at past history. Kevin, you dumped Baidu, the stock I've made more money on than any other stock in the world, Baidu. I cried. I dumped Baidu. Some of us are going to get a big loss for it for this year's gains. But yes, we dumped Baidu because for 4 years, it couldn't move under Trump in the past. So we're not going to wait 4 years for a stock to possibly move when past history tells us, doesn't guarantee, but past history tells us future performance does not look good for a Chinese-based company. You've got to pay attention to the market sentiment. This all comes down to, and it's sad, because most people that go through an education, why forget the level 1 basic training that you've got? Fundamental, technical, and sentimental analysis are the foundation to profitable trading. You can't skip it. And one of the biggest things I think I've seen is people getting politicized, political. Democrats, conservative, liberals, they're all bad. You're bad. He's bad. You like him. I hate you. Blah, 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 blah. It doesn't matter. You trade with what you've been given. You invest in what you've been given. A couple of you are pretty disappointed with oil stocks and energy stocks. Get out of them. You can't be married to stocks. You have to trade the environment that you've been given. Question to the group. FOMC is under pressure to deliver rate cuts. Anyone here, what do you think? Will rate cuts juice our markets higher, or will they not matter? I was actually going to do a poll question on this one, but what do you think? Will rate cuts help our stock markets, or will it not matter? Maud thinks it'll be a sell the news event. Anyone else? Help in the near term? Payroll's the key. Well, it's interesting. We can kind of go off the last 4 rate cuts, right? It's actually the last 3. Last 3 rate cuts juiced our markets higher. And there's a range there. But the short answer is, in general, you're looking at 5% plus in a near term 90-day run. Doesn't mean that it wasn't part of earnings. It doesn't mean that that it might not have been the catalyst. But past history says they're under pressure to deliver. It'll help out the housing market. I think it's going to be a boost. I think it's going to help us. Big bad spending bill. Boost or bust? What do you think? Boost or bust? What do you think? It's funny. 3 of you just put bust in there. Since I don't know what's in it, it's hard to render an opinion. So 3 just said busted, and one's on the fence. 4 and 5 just say busts. Guys, it gives certainty for tax rates for the foreseeable future. I thought markets like certainty. It gives, which is kind of the big one, gives the taxpayer more write-off. The taxpayer is the GDP growth or catalysts in this country. It should be a boost for this year. If we're in a big deficit at the end of the year, we'll pay for it next year. But markets like certainty. People like money. In a consumer-driven GDP, when people have more money, they spend it. Again, this is going back to some basics. Let me ask one more question. And again, the neat thing is, guys, you're welcome to disagree with me. And I really hope down the road that someone's paying enough attention to these that you can come and call me out. Hey, Kevin, you said this then, it didn't happen. I get it. But we're seeing some things this year that are proving these fundamentals yet again. What's continuing to work? Someone tell me, what's continuing to work for growth in our stock market? There are 2 specific things that I'm noticing. And Russ, it is the big, beautiful bill, but it's been tagged by those that don't like it as the big, bad bill because it increases It increases the deficit. It's funny. You got some groups that say it increases the deficit, some groups that say it decreases the deficit. I'm being I'm being non-judgmental right now. What's continuing to work in our stock market? By the way, credit to someone that did say the contrarian. So if everyone thinks it's down, then up it is, right? Mag 7. Ooh, I love inflation, but that's an interesting comment. Mag 7 still moving the market. There's one other thing that's moving the market that I hadn't realized and I hadn't talked about. I'm just curious if anyone else knows what that one other thing is. And all right, now, and again, I didn't realize it until recently either. I'm going to say the dogs of the Dow, the lower moving stocks that way outperformed on the bottom of the barrel the last 3 years are starting to move now. So Bank of America be one of them, Disney's one of them, Visa has been one of them. Verizon better hurry up and be one of them, right? But the dogs are starting to move. Was this working 3 months ago? No. And it's interesting because we had a fear of inflation. Boy, good typing. Fear of inflation paralyzed our markets, and we had tariffs. So here we go. Can someone tell me what, yes, what has higher inflation right now? What has higher inflation? Where is inflation killing the US economy and stock market? Food. Mod, I disagree. Milk's down, eggs down, bread's down, canned goods are down, meat is down slightly. There might be in certain areas. Kind of my grocery. Oh, so actually, that's it. I know it is regional. And I'm going to ask this question: Are you? Do you go to the natural food stores? Because my wife has said the organic stores are up. Well, not across the board in Utah they're down, and nationwide they're down. Kroger's down here in the U.S. Smith's is down. Walmart's down. And eggs are down okay, but not a lot of other items. Again, eggs are down, milk is down, vegetables are down. The only thing that I couldn't find that was down were meats, which is interesting because we slaughtered a bunch of chickens. Chicken should be down significantly. But for the fear of inflation, it's not food. It's not energy. It's not fuel. Where it probably is Inflation in healthcare. I mean, obviously, two of you are doctors, so that definitely, yes, it seems like I pay more every year in that area as well. So you got me on that one. There is inflation in healthcare, which I think there's always inflation in healthcare and car insurance. And that's why you have to go rebid them out every 3 years to get out of your group and to get lower. And it's ridiculous. Every 3 years, we redo our healthcare, get new pricing. We redo our cars. We do redo vision and dental. I probably should redo house, but I can't do that one. So, all right, let's talk tariffs. What's more expensive today due to tariffs? Again, I found this very shocking. Yes, almost nothing except booze. uh, yeah, it's wine, it's spritz, it's booze. Cars are down. I don't understand how steel is down, aluminum is down, grains, commodities. Uh, uh, on a how do I say it? On a competitive commercial commodity base, we're down. And someone just made a comment. I'm not buying anything, but tariffs are not in full effect yet, which is correct. They're not, but we've done an amazing job of collecting money off of tariffs. And we did get the warning that some companies like Walmart may start to pass those on. But in 100% honesty, except for booze, nothing is more expensive today than going back to December and January at the beginning of the year. Cars, autos, boats, motorcycles. Nothing is more expensive today than it was both December and January. It's not there. Doesn't mean it's not there yet, but I really enjoy how we went through the weekend. They're going to tax the big tariff companies. Canada came back and said, no, we're going to pull it. We want to keep working to make a trade deal that's going to work for both sides. I had to giggle a little bit. Trump kind of got a little bit of his own medicine, right? Oh, we're going to tax you guys. He blew up, flew off the handle, walked away from the trading table. All right, we're not. Let's get this trade deal done. Um, everything right now is working. I put a little comment in here because I spoke to a buddy um, over in the Middle East, is the best thing I'm going to say. I'm going to agree with him. Boots on the ground, soldier boots on the ground. If you want to know why the U.S. stepped in, I'm going to give this to you. Reasons why the U.S. stepped in. With that said, no earnings. We're going to get prepared for earnings coming up. The big picture, I found it very interesting. We're trying to come up with things to talk about. And right now, I agree the market is priced for positive outcomes. I don't understand how that will restrain upside potential growth, but definitely if the market's priced for positive outcomes, there is more downside risk. What takes away some of those risks? Valuations, discounted interest rates, lower or a weaker dollar. As I was going through this information and I listened to a podcast here recently, I'm going to give you guys just the thought. And here's my thought suggestion. Market valuations are higher than historical averages. But are they warranted with the Mag 7 and other profitable companies in S&P 500? Things change over time. We're making gazillions of dollars. Is the historical average of 15, 16, 70%, 17% market price to earnings valuations, is that correct? Should the average be closer to 21 now? It seems like we've been averaging between 20 and 21 for about 9 to 11 years. Does the market have to pull back because it's not at historical averages? Or does the market have to change with the abundance of cash? If you look across the world, most, how do I say it? I think as I heard it last, most market valuations are off almost double digits. So it's going to be in that 8 to 9% range. Some of the emerging markets, it used to be, I think it was 28%. It's not emerging markets. 28% of foreign markets have cut rates. And as of last month, that moved from 28 to 60% of foreign markets have cut their interest rates. But the US is a dollar short and a day late. If 60% of markets have cut their interest rates, another reason I think a cut here boosts us on an international playing field. It makes it cheaper for us to make more money. As I went through again the big picture, it's interesting because people don't have answers right now to, how would I say it? They don't have answers to normally accepted economic theories. Let's just put it that way. There's a lot of economic theories that aren't working right now. Valuations, price to earnings, tariffs, inflation. We can go through the gamut. Thank goodness we've stayed in the market. Thank goodness our process doesn't get us out in April when we've fallen 20% and the market's going to die, and we can stay in it with the process that makes up something on the way down, so we make up even more on the way back up. That's what we do. That's what a Warren Buffett derivatives protection opportunity gives your portfolios that everyone else is missing. Yes, I don't understand everything in the market. I can spend 40, 60, 70, 80 hours some weeks crunching numbers, absorbing as much information as I can, trying to figure things out. And the right to sell your stock at a certain price for a certain period of time allows me to be wrong. It allows your portfolio to invest in high risk, high reward, volatile type stocks, betas above 1.5, Sharpe ratios above 1.5. It gives you the ability to take advantage and try to make something as markets move one direction or the other. That's the beauty of what we're doing. We're still bullish. In fact, technically on the Dow, not only are we bullish, but we are slightly overbought. And that will probably increase throughout this week as the end of the quarter just happened today. More money's coming in Tuesday, Wednesday, vacation on Friday. We're not going to pay attention to anything that happens on Thursday. S&P 500. Why does that so not look right? That's March. These are March. What the heck? Swear I thought I had the right ones. Well, there's June. All right, let's see if I can't find where these are at the way they're supposed to be. This device, there are the March ones. Watch this, I gotta give it a second for it to catch up. Come on, catch up. Wouldn't think that it's sort by descending. There they are. Here's the S&P 500. Gonna say, how'd that change? It is also slightly overbought. 72.03, 70 is the median line on the RSI. Last but not least, the NASDAQ. We'll insert this one in as well. Slightly overbought. We're probably going to be overbought through this week. New money comes in. Funds are being sold off and purchased back into. Next week, we're going to be looking at earnings, and we're probably going to start to protect stocks a couple weeks early this time through the earnings. Next week, we'll have our earnings dates out, or the estimates for companies that are coming up. Where's the S&P going to end? July of 2025? Today, I have no idea. Partially that's because I've taken a little bit of time off here. I do not have an expectation. If you forced me to say something, I'd probably say down between 1 or 2% in July. But that also depends on if we do a July rate cut at the end. I could see us being flat to up 1 to 2%. There were no earnings to report of this week. There's nothing on the radar for earnings that values any attention. Economic reports, we have ADP on Wednesday. Our non-farm payroll, private payroll, that all comes out on Thursday because the market's closed for the 4th of July. It will be a low volume Wednesday and Thursday day, most likely. And ADP has been off by so much here recently that I've noticed our market movements are becoming less and less on the ADP numbers. They're no longer becoming relevant as they're sticking, I don't know, I can't figure it out. As they're sticking different ways to review the employment, ADP is missing employment numbers worse and worse every month. So nothing to worry about. We did talk about preparing for summer doldrums. more short calls, more long puts in place, leap long calls after we take off the short calls. But this was about 3 weeks ago. We're waiting for Meta to break 700. It broke 700. We didn't add short calls back on for most people on Meta. We didn't go protect the 725s that we dollar cost average, the 700s or the 720s. We rode the wave. Not only is it above, but today it traded at closed at 738.09. We're waiting for Disney to break above 120. Well, Kevin, you weren't protecting it. You kind of let it run. Traded today, 124.01. We're there. We're where we thought some of these were going to be at. We're waiting for NVIDIA to break above the 144, 145 range. Today, it closed 157.99. 99. Micron to move back to 150. Traded down from earnings. So this one's not running the way that we want it to. It's at 123.25. Waiting for Bank of America to reach 250. Well, dang it, the thing is kind of caught between 205 and 215. It is closing today at 209.53. Google, we wanted to get to 200. This was back when it was at 160, right? 176.23. We want Bank of America to run to 55. And again, 2 months ago was at 36. I know some of you gave me a call. Really, Kevin? Really? You're killing me. Do you know how to run calculations? Where is your brain at, Kevin? 47.23. Man, we want JP Morgan to move back up to 255 when it was stuck on the 235, 240. 289.91. It's a process, and the process sometimes sucks, but the results are awesome. Some very interesting commentaries. I would suggest everyone read this article. When we say world-renowned economist, one of the four big ones has a very, very interesting take on Trump. You can't find a better economist, whatever the guy, economist. I can't say it right. Worldwide, that put these numbers together. It is an article. Again, if you read anything when I get this posted, very interesting how someone thinks that Trump outsmarted us all. The numbers validate it. The big beautiful bill clears the Senate hurdle after high drama. Very interesting. I want you to read through on what's in it and why it's going to be important to us. It could add, it could subtract. You really can't say what it's going to do until it comes through. It depends how much pork is in it. But definitely read through this one. I have a very interesting article from just a no name. I'm finding myself spending more and more time with the no names and checking their numbers out. Housing and labor markets. A reason why maybe we should have been cutting rates a while ago. It's a third-party article. It's a small guy. The numbers are excellent. Please read through it. Another article, why eliminating the U.S. trade deficit is near impossible task, according to Barclays. You've heard Keith talk about it. It is an impossible task. You can't be doing tariffs for equal trade deficits. I think Trump is understanding that because it can't be done. And it looks like what's happening with Europe, we can get close, but we're still we're richer. We're going to buy more. It's just the way things are, right? It's a very good article that that explains why the U.S. can't ever be without a trade deficit for the most part because of who we are. Interesting article, don't necessarily agree with it, but Bank of America says buy these 5 stocks are set to rally in the second half. Apple was in there. I kind of disagree with Apple, Roku, Jabil. I don't see it, but the numbers are there and the numbers are accurate. I'm putting that in here for you guys to read. A very interesting article on Fed. This is an old article, but it does see 2 more rate cuts this year. I'm just throwing this out there. What if 1 or 2 of those rate cuts were 50 basis points instead of a quarter or 25 basis points? If the housing and the employment take a dive, yes, they're obviously late to rate cutting. We could see a 50 basis point rate cut in the future, which would be a benefit to me, right? Macro, a very interesting article on Micron. They had amazing earnings. And the only reason is that funds that got in, people that got in, have hit 100% return on it in the last 4 months if they hit the bottom at the lows. A very interesting article on Micron on why, you know what? It just needs a break. It just needs a break. And last but not least, I think that was it. Micron, yep. It's a long article on Micron. With that said, what questions do you guys have for me tonight? What questions can I try to answer over anything that I've said or anything regarding to your portfolios? Are there questions you guys have that I can try to answer for you tonight? And yes, there was one that was sent to me, and it's interesting because I think I already answered it. The question was talked about earlier, and it was emailed to me. Again, where do we think we're going for the rest of summer? Because I said summer doldrums, and we've had anything but that. If you look at the charts in May and June, sell in May and go away. Look at what people sold away at. They sold away at 5,600 on the S&P 500, now trading at 62. So we're talking 820 points. Selling in May and going away cost people 16.33%. I don't know. I will be the one to say, hey, we might run into some summer doldrums because we saw this leveling off through June. We had some short calls. We might get called out and take some profit on some short calls. But for the question that was asked, where do we see the summer doldrums? They're not there again. Summer doldrums were 804.95 points on a 5,600 market. Let's do the math on that. 804.95 divided by 5,600. That was 14.37% ago. The sell in May and go away, beginning of May, sell in May, go away, just cost those people 14.37% of the market. I do like that we're seeing the 50-day coming over, and if we can cross above the 200-day, that's a golden cross, 8.3% in the next 3 to 6 months. That would put us upwards to a 7,000, close to it, but not quite, a 7,000 end of the year S&P 500. We were 5 points away from the 50 getting above the 200-day. So I don't know. In all honesty, I took 3 days off last week, and I took the Monday the Monday off the week before. So I just don't know. But the short answer is we're going higher. We've been going higher. Let's not fight the market. Let's make sure we don't sell in May and go away. Would have cost you, again, 14.37% year to date. So any other questions? I didn't see any other questions coming in, but thank you for me the email question. If there aren't any other questions, guys, I want you to have a great 4th of July. Be safe with your fireworks. Don't burn your neighborhoods down. Have a great 4th of July. Markets closed on Friday. New money coming in at the end of a quarter will probably hit Tuesday, Wednesday. Thursday will be low volume. Friday is a holiday. Enjoy your weekend. Enjoy the holidays. And guys, have a wonderful evening. Appreciate you guys being here. Hopefully you're enjoying this little run up. And guys, I gotta tell you, I love it when a plan comes together. You guys have a great evening. I'll talk to you next week. Good night, everyone.